Play Sky News.
From the Sky News Centre at 7.
Now that you're up to date, we can go into a bit more detail.
Things can change incredibly quickly.
Taken by surprise.
Have you ever known a moment like this in British politics before? Yes. Cheers.
We'll start with breaking news.
Let's get the latest on the ground.
So, by the end, we'll hopefully all understand what's going on in the world just that little better.
A very good afternoon. These are the top business stories live from the Sky Newsroom. Thousands of farmers march on Westminster to protest against the Chancellor's changes to inheritance tax. Rising tensions between Russia and the West send global stocks lower. And a warning from the Governor of the Bank of England that the global economy could be fragmented if Donald Trump imposes steep trade tariffs. A very good afternoon and welcome to Business Live with me, Darren McCaffrey. Now, thousands of farmers have travelled from across the United Kingdom to Westminster today to protest against the government's changes to inheritance tax rules. Farmers say that the changes will impact food security and the future of British farming itself. The Prime Minister, though, says that he understands their concerns, but argues that richer landowners should pay more to help fund better schools and hospitals in rural areas. So what are the issues at stake and what are the numbers at stake? Let's speak to our business and economic correspondent, Paul Kelso, who's been drilling into those numbers and joins me now. Paul.
Yes, nobody likes inheritance tax, but until now, farmers haven't had to worry about it. That's because they've enjoyed 100% tax relief under two categories. Agricultural property relief, that covers land and farm buildings, and business property relief, that covers crops, livestock, machinery, farm shops and the like. But the problem with 100% tax reliefs, if you're the Treasury, is they're very attractive to those who've got wealth to spare and want to shelter it from you. This shows who's been buying land sales over the last 10 years. Look at 2024, first quarter, 3 quarters of this year. The red bar here is farmers. Just 31% of land bought by farmers. Who's buying the rest? It's lifestyle farmers, think Jeremy Clarkson, private investors, think James Dyson, the vacuum tycoon, and institutional investors who still think land, at least, is worth investing in. Now, the Treasury believes this is unfair and unsustainable. So instead of those reliefs we talked about, there's going to be inheritance charge payable, but above certain thresholds. £1 million for every individual farmer. That rises to £1.5 million once you add the £500,000 or so of relief that we all get from inheritance tax. And if a couple is handing on a farm, that could be £3 million before inheritance tax is due. But it will be due. The question is, how many people will pay it? Well, the government likes these figures. This is agricultural property relief actual claims for 2021. We're interested in the ones down here, which are valued estates at more than £1 million, so might be lifted above those thresholds we talked about. Well, there were just 462 actual claims in this year, and around a quarter of estates were covered. So that's where the government gets its numbers. But this doesn't include those business property reliefs, the crops, the cottages, the combines that are added in. That increases the value of estates. The National Farmers Union says that these numbers are worthless. You need to look at these ones. This is DEFRA's figures, the Department of the Environment. This is the size of farms proportionally by value. 10%, the lowest, less than £250,000. But look at this up this end. 49%, the black bar of farms in England, the government's own department thinks are worth more than £1.5 million. So that exposes them potentially to an inheritance tax charge. Now, we know farms are asset rich. Land is valuable, so is some of that machinery and property, but they are cash poor. This shows us just how cash poor. This is profits for cropping farms, so horticulture, arable, stuff you grow as opposed to livestock. At this last financial year to 2024, less than £50,000. The average, many will be making much less than this, of course, many will be making more. The average profit for a farm. So if you are landed, say, with £1 million inheritance tax bill, you'll get 10 years to pay it. That's more than individuals get, but that's still £100,000 a year. That completely wipes out your profit. So perhaps the question for the agricultural economy is less about, is inheritance tax fair, but how do we make farming pay?
Indeed, and that is a big question, is one I've been putting to people over the last couple of days, Paul, and it's fascinating, isn't it, really, that in essence, one of the reasons farmers are not doing very well in this country is because we have got slightly addicted, I would say, to cheap food. But that's a whole different discussion on this inheritance tax itself. We've heard from the Environment Secretary and from the Prime Minister today, and there is no sense the government is for turning on this.
No, it doesn't look like it at this stage. It clearly appears to be a battle the government believes perhaps it wants. They certainly should have seen it coming. Inheritance tax is hugely unpopular. Farmers mobilise, and it's an industry that's been under fire, it would say, on many fronts since Brexit and beyond, they would say. So in it very hard to make the numbers add up. And Steve Reed, some interesting comments he's made to Sky News. He's talked about farmers needing to get tax planning. I mean, that's true. That's what they will be doing. There will be ways of avoiding, perfectly legitimately, this tax by passing on farms 7 years before you die. You could take life insurance against tax. There are things you can do, but it'd be interesting to see how farmers take getting tax advice from one of the ministers imposing this on them. So for now, it seems the government wants to weather this storm. The question, as ever with these political rows, is how much disruption might be caused, how much appetite for that, how much time, frankly, have farmers got to protest, and where does public sentiment lie? Because, I mean, it's interesting. Jeremy Clarkson, clearly an absolute weather vane for this debate. Here is a man who has articulated the concerns of farmers while being precisely the sort of person who has put his money into farming, by his own admission, to benefit from the inheritance tax breaks that are now going to disappear. Are we going to end up in a world where some people like Jeremy Clarkson, artisans, farmers who've made their money in other fields, who are doing it essentially as a way of entertaining themselves, and in Clarkson's case, others, but essentially a rich man's pursuit? Or is it going to remain an important part of the food security of the country?
Yeah, indeed. And the government know that they've got a pretty forceful, visible, emotive, it must be said, lobby protesting against them. Paul, great analysis. Thank you very much indeed. Paul Castle there, our business and economics correspondent. OK, well, earlier I spoke to Jeremy Moody. He's the secretary and advisor to the General Association of Agricultural Values, which, unsurprisingly, values farm estates. And this is what he had to say.
I think we're being misled by a number of things here. The first is that the figures the government were relying on during the budget debate was simply those who are claiming agricultural property relief. So that's just land and buildings and dwellings. It excludes the livestock, the machinery, the crops in store and everything else. And that's a very significant part of the value of a farming business, and that was ignored. So the first figures that came out were misleading to that extent. Also misleading because they include a lot of land that has been bought by people who are relatively or more wealthy that is below the £1 million threshold. Those will remain, of course, protected by the £1 million threshold, but those people below that are not necessarily farmers. We had paperwork out last night from the Treasury looking at some of the BPR analysis, and it's hard to do. But on the basis of looking through those figures quickly, and looking at people expecting to pay tax, because it's not just that number, 400 or 500 a year, that we're looking at. If we add more for BPR, the business property relief on livestock and the rest, and then think about this over a generation, the taxpayers who are likely to die with farm assets over that period, even on the government figures, you get to something like 20,000. And we think the government are underestimating the exposure of farm businesses to this. When an average cereals farm has a net worth of 3.1 million after debts, that requires 4 owners to meet the government's challenge.
In saying that, I mean, the Chancellor has said there are further exemptions beyond that £1 million figure, up to 3 million if it's passed on to children and it's owned by a married couple, which I assume would be quite a few of these farms. As in, there are exemptions beyond that much talked about £1 million figure.
Yeah. The answer to that is yes and no. There are those other nil rate bands. There's the first 325,000 that any taxpayer gets. And that is there, firstly, to cover all your personal effects. You essentially have to be a monk with no personal assets to be able to bring your agricultural business and land into that 325,000. So it's there but not there. It will get used on other things. And then the second 175,000 is if you have occupied a house that you wish to give to a descendant. which of course is not always true in every case. A tenant farmer living in the tenant farmhouse would have no ability to pass that house down. And once you're looking at an estate above 2 million, you start losing that 175,000 immediately. So it's a misleading, it's an attempt to provide a simple, reassuring answer for something that's simply not as neat as that, and does assume that you've got absolutely nothing else in your life but your tractor.
But is it that, I mean, the government would turn around and say they're trying to be fair here. They've put up taxes on pretty much every business in this country. They would argue to plug the public finances. That's a different political argument. But they would say it's about fairness. Farming is already subsidised, and that this is making a less generous package for farmers, sorry, a very generous package for farmers, a little less generous. That's true, isn't it?
Well, I think there's a point here to make that actually the government's changes are increasing the tax burden on all privately owned family businesses, whether farming or otherwise. It's simply that APR is in the mix alongside the business property relief that a printer, a pub, a livestock market, an accountancy firm could all claim. But moving back into this, I think the government intended probably that this be a relief for, as you've said, the small family farm. They've simply misunderstood what is a small family farm these days with the kind of economics that your correspondent was outlining. They've simply come in too low for their own purpose and are digging in on data that does not describe reality.
There you go. That was Jeremy Moody speaking to me a little earlier. Well, among the farmers in central London today was the TV presenter and now farm owner, Jeremy Clarkson, who spoke to Sky's Sarah J. Mee.
Back down.
Keep moving, please.
Back
guys,
down.
Keep moving.
You know, if you make a mistake, we all do, and they have, be big enough to say, we made a mistake here, and then back down.
What happens if they don't?
I don't know. British aren't very good at protesting.
Keep moving, please, guys.
What do you want to say to the farmers here today?
Oh, good luck. You know, I'm trying to support you as best I can.
Just a final message for the Prime Minister, if he's watching today from Rio.
He isn't. He's in Rio.
If he's watching...
He's watching. He's going, la, 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 sit with adenoids. La, 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 with his Playmobil hair. Don't like him.
Well, there's one man who's not a fan of the Prime Minister. You can see more of that and indeed more of this debate on The UK Tonight with Sarah J. Mee. That is here on Sky News at 8 p.m. Do join Sarah for that. Now, let's have a little bit more look at detail, of the numbers involved today. And I did speak to Rob Hitch earlier. He's an accountant at Dodd & Co. who specialises in farming, and he's going to take us through some of the figures.
You could argue that land prices have been way out of kilter with the earning capacity for a very long time, and we're in a position now whereby some farmers may face an IHT liability. If we look at our businesses, probably, like the NFU analysis, there's probably 50% of them at least, I would think, would pay IHT if they hold all the assets at death. I suppose the key thing is, does that actually happen? A lot of business owners pass assets down during lifetime, which you can do relatively easily, and that would probably minimise the risk to a lot of businesses.
I suppose what I'm trying to get at here, Rob, is there'll be a lot of people watching, a lot of people who run businesses, a lot of people who've got money, some people who don't, who say, well, we all have to pay inheritance tax if we're wealthy enough to do so. Why is farming special? Why should farming be any different?
I don't think it's farming. Farming gets a special relief in that it gets agricultural property relief, but it gets the same relief as businesses, which they've had for 40 years as well. So it is protecting wealth generation and business assets that are within people's hands. Now, in most cases, it is possible to pass those down during lifetime, but they become potentially exempt transfers. So you've given it away, you must survive 7 years before it drops out of your estate. Now, if you're young enough, you can insure against that. But the change to the rules today effectively means that if you gave something away on the 29th of October, you're fine. And if you gave something away on the 30th of October, you're not. Now, if you're 60, that's probably doable. If you're 75 or 80, that's a terrible position to find yourself in. And you just think the government haven't sort of foreseen some of the problems that these rules might create for people that have followed one, been playing on under one set of rules for 40 years and then suddenly found themselves under another. Okay. I don't think the farmers I speak to, I don't think they're they're completely antagonistic about if this is a tax that's here and we have to plan around it. And it's one of those risks that the business takes on, and we have to plan and make decisions in good time. But there are a certain cohort of people who will not have that time to do it. You know, this will collect most tax from people who die in the next 7 years, most of which are over 70 already. And that, I can't imagine that is what the government intended.
Yeah. So it's essentially the lack of consultation, I think, is kind of what you're trying to say about this. Just finally, Rob, you know, we've heard from Jeremy Clarkson saying if this continues on, it is over for farming. We see people there talking about the death of the family farm, some suggesting that this will kill off farming in this country. Is that hyperbole? I mean, it sounds to me like it's hyperbole. You talk to farmers, you deal with them. I mean, is this the death nail for family farming in this country?
I can't see it being that. You know, people want to farm and people will continue to farm and people will continue to pass farms down. They just won't be able to do it as freely on death. So they will need a lot more planning. There'll have to be a lot earlier discussions about succession, which maybe some other businesses do, which is why we're not hearing so much, you know, uproar from the wider business community about the BPR changes. But it will hurt a certain cohort, generally old people who can't make gifts and survive 7 years. And that seems brutal. And as I say, you know, probably needs to have some sort of change. And the government, you would hope, would see some sense in providing a sort of window for those sort of people to not find them. Because we're going to find some farms, as you point out, if there is an IHT charge, they don't generate enough cash necessarily to pay that bill.
Right, let's bring you up to date with some of the rest of the day's business stories now. And President-elect Donald Trump is expected to nominate Wall Street investor and campaign donor Howard Lutnick as to be his new Commerce Secretary. Lutnick, whose nomination will need to be confirmed, of course, by the US Senate, is the co-chair of Trump's transition team and had been seen as a contender to lead his government's Treasury Department. The governor of the Bank of England has warned that the global economy could be fragmented if Donald Trump imposes steep trade tariffs on other countries. Speaking to MPs today, Andrew Bailey said that the UK should keep an active dialogue with the incoming US administration and said he didn't want to jump to conclusions of what effect tariffs would have on UK economic policy. OK, you're watching Business Live here on Sky News. We're going to take a quick break. Up next, as you can see, the FTSE has finished a little down today. It's been quite turbulent, the markets, in the wake of what's happening with Russia and Ukraine. We'll have all the details in just a couple of minutes. Stay tuned.
It's like a football final with only one team on the pitch. This isn't just a call to vote, but a call to remember. The freedom fought for by the African National Congress.
I'm Yusra Al-Bagher, Sky's Africa correspondent based in Johannesburg, South Africa.
A cyclone and 2 burst dams wiped out hundreds of generational homes.
This was the second dam that the floodwaters hit before it tore into Derna. We are in the heart of Nairobi, and we're watching as protesters were heavily tear gassed.
The sheer fearlessness and persistence of these guys is astonishing.
We help you understand the world with us. I remember going into the iconic Omdurman market in the heart of Sudan's capital for the first time since the war started. And this is what's left of it. Bullet holes through buildings, shelled balconies, bullet cases on the floor. I witnessed the complete destruction of a place linked to my childhood memories and the lives of millions of people. This is insane. This was a bustling residential area. So many friends who lived here. My most memorable interview was with a 15-year-old boy who'd survived being stranded on a migrant boat on its way from Senegal to the Canary Islands.
After 13 days, our food, water and fuel supply ran out.
I felt awe when we saw the mountain gorillas in Rwanda.
They call him the king of the jungle. This is the alpha silverback.
Sky News. Get the full story first. Yusra Al-Bagir, Sky News.
There's always more to the news than a headline. We want to discover, to delve a little deeper, to find out what's really going on. Explanation, analysis, the people at the heart of every story. I'm Neil Patterson, and this is the Sky News Daily Podcast. So, by the end, we'll hopefully all understand what's going on in the world just that little better. Available wherever you get your podcasts.
Significant day of this conflict.
They keep telling us that they want aid.
And this is what's left of it.
Tanks, heavy vehicle.
Why only in America?
People want their country to work.
You want a job in a normal life.
Why are these homes empty?
I want you to be honest with people.
That has happened within minutes.
Sky News, the full story first. Free wherever you get your news.
We arrive. A secret hospital hidden in the Myanmar jungle, treating the victims of this bloody war. This is Myanmar today. Its military rulers don't want the world to see, but we have.
I fight for my own future. I fight for my generation's future.
This is an actual crime.
They don't care for that.
Myanmar army is only a couple of kilometers away.
So this is a major humanitarian disaster.
OK, let's have a look at the markets on this Tuesday afternoon. And rising tensions between Russia and the West have sent global stocks tumbling earlier. But they have slightly recovered some ground. Comes after President Putin lowered Russia's threshold for a nuclear strike. We've seen a bit of a rally, though, late this afternoon. It also led, though, it must be said, to losses in Europe too, with the main indices all closing in negative territory. As you can see there, a sea of red. Here, the FTSE finished down 0.13%. And if we have a look at the exchange markets when it comes to currencies, the pound also down against the dollar again today, but up a fraction against the euro at €1.20. And finally, a barrel of Brent crude oil is at $73 a barrel, just down slightly again today. Well, let's bring in Sam Kerr. He is head of equity capital markets at Merger Markets. Sam, very good afternoon to you. It's been a bit of a up and down day today on the markets. Clearly, a little bit of uncertainty and uneasiness with the Russia-Ukraine conflict.
Yeah, I mean, it's been interesting, hasn't it? I was just looking at the Europe Stock 600 and I saw a fall of about 0.72 intraday, which actually I would say is a relatively minor move in a market given the implication of the news in Russia as high chances of nuclear war. I think what's been most interesting actually underneath the headline moves is the individual stock moves of defense companies, particularly Rheinmetall in Germany, which was up almost 4% today, which indicates to me that investors are positioning now for an escalation in hostilities and high European defence spending, particularly obviously with President-elect Trump and his position on NATO.
And in saying that, Sam, is this because we feel like we've been here before, in the sense that, you know, we've seen ratcheting up, it seems, on both sides from, you know, Ukraine and Russia in the past, and yet it's not led to necessarily the most dire consequences, and so the market's a bit more relaxed? Is that what's at play?
Certainly from my experience, it feels like that's the case now. I think if this had happened 2 years ago or just after the start of the war, I think the market reaction would have been far more dramatic. I think in general, investors have started to read Russian nuclear rhetoric as a form of saber rattling. Obviously, it's a very troublesome saber rattling, but I don't think they're massively sold dramatically on the rhetoric that this does mean impending nuclear moves by Russia. I think they see it very much as part of Putin's positioning of Russia on Ukraine. And I think that, as I was saying before, the individual move in defence stocks, I think, is actually more important. And we've certainly seen this year in the European IPO market, a big defence IPO in the form of Renk, which is a German company that supplies drive systems for tanks. So I think investors are positioning for a long war between Russia and Ukraine.
And just finally, Sam, let's talk about the incoming Trump administration. Lots of report this afternoon that he's found a new commercial secretary. Just talk us through that, and also still trying to find a Treasury secretary.
Yeah, absolutely. And Lutnick was believed for a while to be in one of the final two for Treasury Secretary. So the fact he's been appointed in Commerce, I think, indicates that Trump is going on a different direction for Treasury. Lutnick is believed to be a little bit of a tariff hawk, certainly has discussed the benefits of tariffs in the past. And Trump's last Commerce Secretary in his previous administration, Wilbur Ross, was very involved in tariffs against China. So I think the market will be waiting to see how aggressive Lutnick and the Trump administration is going to be on tariffs.
Yeah, really, really fascinating stuff. Sam, as you say, thank you very much indeed for your time. That's Sam Kerr there from Merger Market, live in central London, with the news there that it looks like Howard Lutnick is going to be the new Commerce Secretary under a second Donald Trump term. We're expecting confirmation of that a little later on today. That's it from me on Business Live for today. We're back tomorrow morning, of course, as always, at 11:30. Please do join me then if you can. Up next, it is Mark Austin with the News Hour, with the latest on Russia, Ukraine. That's coming up at 5 o'clock. But from me, for now, thanks for watching, and I'll see you tomorrow.
We've got your Sunday mornings covered. From the front page and the sounds of the streets to the voices of the people who make the major calls and big picture politics beyond Westminster. We'll put you at the heart of our story. A new start to Sunday. I'm ready. Are you? Join me, Trevor Phillips, Sunday mornings on Sky News.
Play Sky News.
From the Sky News Centre at 7.
Now that you're up to date, we can go into a bit more detail.
Things can change incredibly quickly.
Taken by surprise.
Have you ever known a moment like this in British politics before?
Yes.
Cheers.
We'll start with breaking news.
Let's get the latest on the ground.
So, by the end, we'll hopefully all understand what's going on in the world just that little better.